We have some good expectations about tax reform, according to new findings from Deloitte's latest CFO survey. Many CFOs say that tax cuts will raise their domestic investment, their hiring, their wages, and accelerate cash repatriation. Joining us now to talk more about that in the First on Fox interview is Deloitte Global CFO Program Leader Sandy Cockrell. Sandy, good to see you.
Thank you, Maria.
What did the study say?
First of all, it's a backdrop. We've done this quarterly survey for 32 quarters. This, by far, is the gold star survey in terms of overall optimism. I think a lot of that is driven by tax reform, the clarity that CFOs now have to plan and think about their businesses, especially the international tax provisions, which we've lived under a cloud for a long time as to what the rules were going to be. Now CFOs really do have a way to plan. It's going to be hard to implement, very complex. But now for planning and what they're going to do with foreign cash and those kind of things, they've really got some clarity.
So it doesn't feel very optimistic today, but you think managers are going to start deploying cash and creating more economic growth?
Yes, absolutely. When you look at the effects of tax reform, what CFOs are saying, number one, higher levels of investment in U.S. business. That's number one. Higher wage growth. That'll be very important. Higher hiring growth. And more spent on R&D and paying down debt.
Sandy, as you look at this, how do we go from talking about it, right, the strategic side, to the tactical, the unveiling? When do you think that'll start to happen and we still feel the effects in our economy?
Actually, I think you're seeing that now. If you're starting to listen to earnings calls and you're starting to listen to what CFOs are saying about this coming year and into the future, that clarity allows you to plan and articulate and communicate your plans. That's what's going on.
Yeah, I think, look, we're doing it. Yesterday, I just opened a new office in Washington, D.C. Probably by third quarter, we'll open in Los Angeles. We're hiring more people. We're expanding. We're spending much more money. We've taken on another $1.5 billion of projects. So, yeah, I agree with you. I think we're seeing that across the board.
Exactly.
In terms of optimism at the financial sector as well.
A lot of people were saying, well, look, you know, all of this new money that companies are going to be sitting on, they're going to buy back stock. And by the way, we've seen a lot of buybacks this year as a result of the tax plan. Does that bother you? Should we be seeing more hiring as opposed to buybacks?
I think we will see more hiring. In fact, what CFOs are saying is they will probably hire more than they will buy back stock or increase dividends. That's what's come out of the survey.
Yeah. And economic growth, your expectations, we got 2.9% in that last GDP reading.
Well, the interesting thing is, you go back over the last few years, the North American economy has been kind of the bright spot. Europe and especially China were really weak in terms of perceptions. Europe has come back very strong in the way CFOs are thinking about that economy as well as China.
You're right.
That bodes well for optimism.
Yeah, you're absolutely right. A lot of money moving into Europe right now.
Yes.
We'll leave it there. Sandy, it's great to have your insights.
Thank you.
Thank you so much. Sandy Cockrell there.